So Kaplan giving us a figure here. It says he sees the 10-year Treasury rising further to 1.75 to 2%.
Hello and welcome to the home of profitable high probability trading. My name is Tim and I'm one of the traders here at the Live Trade Room, and we're about to trade the US Open fully live and interactive. For those of you who perhaps are interested in learning how to trade, just before we begin, because we've got some very interesting market conditions now to go through and to look for those high probability trades. So just before I do, if you are interested in learning how to trade the financial markets with an ability to make consistent returns from trading these markets, and really from a position of being informed, having a high degree of knowledge and understanding, then we can certainly help you as an organization. So if you do want more information, just go to our website, thelivetraderoom.com, for more information, and we offer a whole vast range of products and services. Depending on how much time availability you have, you can trade the markets for as little as 15, 20 minutes a day, right the way through to obviously day trading opportunities as well. So that's there for you if you want, and you can connect with us through our website. So if you do have any questions, we'll feel free to get in touch with us there. So over the next hour or two, what you can expect from us is we'll go through the process that's involved in preparing for trading, and we're looking for high probability trading opportunities. So we want to do our analysis. We want to make sure that we understand some of the news events that are about to unfold, and see how that can impact perhaps some of our trading decisions. And we're looking for these opportunities across some of the world's largest markets, from your foreign exchange markets like your euro dollar, dollar yen, pound yen, things like that. Euro pound, but also we adopt a multi-asset class view of these markets. So we are very interested in the price of gold, what oil is doing, and the global indices as well. So looking at the S&P, the Nasdaq, FTSE, the DAX, the Nikkei in Japan. So we've got a full breadth of markets to focus on, and we're very interested in the correlations between those markets and the insight that can give us. Okay, so let's get straight into it then. We'll start with our risk warning, if that's okay. Please take a brief moment to familiarize yourself with our risk warning currently up on screen. And the first thing we want to do when we trade markets is to be mindful of some of the significant news events over the course of the trading session. So again, it's really being informed about what's moving these markets, and making sure that you avoid little errors like getting into trades just prior to a major news event. If you can get into the rhythm of just being mindful about the bigger picture, that can certainly help you. Again, avoid those little errors that a lot of new and inexperienced traders make all the time. So when we look at today's news, there's not really a huge amount to deal with, to be fair, now for the afternoon. By far the most important would be 4 p.m. UK time, where we've got the Fed chair testifying as well. So we've got Janet Yellen, who used to be the Fed chair prior to Jerome Powell, who's now the Treasury Secretary. So I guess there's a significant conflict of interest there in terms of philosophy and mindset and things like that. So they're due to testify on the quarterly CARES Act report before the House Financial Services Committee. So I'm sure they'll be pretty much grilled about the impact of their decisions in terms of monetary policy, the fiscal the fiscal measures that have been put in place, the COVID stimulus bill that's been passed to the value of 1.9 trillion, which sees every American receive $1,400 to go and spend, obviously, in the real economy. That's the projected wisdom of that. And now we're hearing that there is an infrastructure bill as well. So, and that could be as much as 3 trillion. So we're really talking about numbers that we've never really seen before from a quantitative easing perspective. So we'll have to see how the market interprets this information. Now, what's been quite interesting is that if we bring up our charts, so really that's the major news. So we've got a kind of a 4 hour, 3.5 hour kind of window of opportunity to perhaps get into some trades, depending on what opportunities exist, and we would expect this news event to actually be quite a volatile trading event. So we do want to be mindful of this event. So perhaps if you do get into trades between now and 4 p.m, maybe look to book in profit at the very, very minimum. Look to get rid of the risk. Don't be carrying risk into this event. We're likely to see some significant volatility, and that's how we can prepare ourselves. So when you talk about long-term, short-term trades, really we're going to trade whatever the market is likely to give us, and if the opportunities stack up, then there'll be slightly shorter term trades over the course of the session, with a view of maybe getting into longer term trades post this news event. So a lot of the conversation will be around at what point will the economy overheat, and as a result what decisions are likely to be made regarding interest rates and stuff. So that's really why it's a very, very important. What's their opinion on the yield curve and what will they allow and things like that. So it's going to be a very, very interesting testimony from both Fed Chair Jerome Powell and also the Treasury Secretary as well. So let's get up our trading platform then, currently up on screen, and we'll see how we position ourselves. So we've had some really good, well, decent moves so far today. Sorry, let me just get this currently up on screen for you. Okay. Sorry, it's just reloaded for some reason. So just give me a few seconds. We'll have a good look at this now. Okay, here we go. So let's slide this currently over onto the screen. Straight away, what I hope you can see is a significant amount of consolidation, retracement type opportunities. So we could look at, if I just get up my pen, I'll share this information with you. So we talk an awful lot about high probability trades, and that means trades that conform to our understanding of what regards high probability, and that's just the likelihood that markets are likely to continue in a certain direction. When we get up and down price action like we're seeing in the euro dollar, like we're seeing in the dollar yen, with very, very little volatility, the up and down nature of the dollar Swiss, for example, you can see over the last 3 trading days, and I'm just we're currently trading inside previous days' highs and lows. Same for like the DAX. So the problem we've got is that this type of price action doesn't really benefit the way that we trade these markets, so they don't constitute high probability trades. But the reason why we like this sort of consolidative move, and we might take the euro dollar perhaps as an example, is that when we get a breakout of consolidation, those are the moves that we do look for when we trade markets, and that then they conform to what we regard as a high probability trade. So unfortunately, we've been sitting on the sidelines with a lot of this price action. There's a lot of traders out there that will be buying and selling up and down all the time. Will they make any money? Some might, some probably, the vast majority probably won't. What we're waiting for is not really getting into this type of sideways moving patterns, but to actually wait for the constructive break either above the 119, which we're very close to the 120 level, or actually which is a price we're getting quite close to now, the 118.73. So that's just for just a brief example. Probably a better example to just share with you is what we've seen today in the pound dollar trade. So we can all agree we've got trend lines to the upside in this market, lower trend lines, higher trend lines. So we can all agree that this market is moving to the upside. So that's really why we've been looking for buying opportunities in the pound for the last 6 months nearly. Something interesting happened here around the 142 level. We rushed up to that level and we bounced back. And as you can see, there's your upper trend line, and we had this sort of knee-jerk bit of price action in this market, pushing prices up. So straight away, that just, it doesn't really conform, and it puts a little bit of a question mark in your head. You know, now does this market get into a significant period of kind of overbought market conditions? The answer is yes. Prices sort of roll pretty quickly, and then we're in this sideways moving pattern, which we've seen across many of the other markets fairly recently. Trend line, and we don't need to be too precise, but we've got this sideways moving price action. I hope you would all agree until something significant happened today. So when we look at this price action, we'd say, right, well, above the 140, we'd be looking for buying opportunities. These are high probability buying opportunities, by the way. And anything below the, let's say the 138, we'd be looking for high probability sell trades. And we've got plenty of room to the downside for this trade. So we're currently in this sell trade. But if I just zoom in a little bit, in a bit more detail, you can see what's happening in here. We've already mitigated risk on the trade, so our stop loss is exactly the same price as our entry. And for a small period today, we had this low down here. We have these strong levels of support, and prices have comfortably broken to the downside. So now we're getting this little snapback, so we're getting a little bit of a pullback here. This could be a decent area actually to get into this trade to the downside. So we can have a look at this market in a little bit more detail, but really we're wanting this market to close below the 37.80 level. So that's what we would want to see happen. And we always, when we trade markets, we want the markets to perform as per expectation. So we're approaching the US cash open. We'd want prices to come back inside this zone, and then there's your next opportunity to the downside for the pound dollar. So you're getting the breakout move, which is trading opportunity number one. It's the breakout, and now what we're experiencing is the pullback. Whoops, pullback. So this is trading opportunity number two, and with a lot of markets that break out, you have to experience, or you have to prepare yourself for the snapback in this trade, and that's what we're currently seeing now. So it's not like it's game over to the downside. What we're experiencing is a little bit of profit taking down at these lows, and now what we want to do, and the psychology of the actual trade, is there's going to be a certain point at which this market is likely to take a next step to the downside, and the price at which we would anticipate that, and this is what trading's all about, it's anticipating the moves before they happen, and then if the market performs as per expectations, then we're looking to get into that trade, and if they don't, then we won't. So we don't want to keep ourselves up at night worried or concerned or anything like that. So what we're likely to see, and we'll see if that's the case if we get follow through, is a nice strong pullback, which we're currently seeing. So in and around this kind of zone in here, there's your high probability pullback trade to the downside, and that's what we look for all the time when we trade. So there's hopefully a decent opportunity there as far as a sell opportunity with the pound dollar. Our trade plan has slightly shifted actually from last night, because we were looking for risk on market conditions, and I'll show you what we were looking for last night was some continuation to the upside. And you can see we've failed to get any, or to see any further upside. So there's a lot of resistance around this monthly high, and it's proven to be important resistance so far. So as the markets change, so does our opinion and understanding about what's going on. That can shift and change very, very quickly as well. We want to stay on the right side of these markets. And some of the trades that we don't like to get into too often is the sell the high or buy the low type of trades. We want breakouts and we want pullbacks. So that's just the approach that we prefer to adopt. And what we're seeing inside, what we're seeing here is sort of a medium quality trade, because we failed to break above the high, so there's no momentum or follow through, and we're seeing prices roll over to the downside. So like for example, tomorrow there might be a higher probability trade to sell this market. If prices come up to this level and we start seeing that extended move to the downside, then we can certainly look at this low. So we're firmly in this risk-off market condition. Again, you know, try to get used to this type of terminology. It's all-encompassing, and it can really help you sort of position yourselves as best you can. I'm going to put the
Fed Services Sector Index of 38.6 in March, that's versus 3.9 in February. Non-manufacturing.
I'll come back to that in just a moment. Actually, the squawk that we run. What was interesting, we had one of the Fed members, Kaplan. He's made some references regarding growth, and is not really of the same opinion as many of his colleagues, but he would expect growth at 6.5% growth and an unemployment rate of 4.5% unemployment rate this year. And he would anticipate actually inflation in 2022 will settle down a bit, is what he is the words that he's used. But he would anticipate increasing rates perhaps a little bit earlier than many of his colleagues. So again, that's dissent really from the status quo, which is lower rates for longer. So we'll see how that plays out. It certainly would cause these markets to be a little bit nervous. The Dow Jones selling lower. The Nasdaq is kind of holding up still, because with this with issues regarding the rollout and an uptick in a surge in new cases, and what that can mean for economies, will just slow things down. So, you know, maybe a lot of those tech firms that are benefiting from lockdown, maybe they will benefit for a little bit longer. So prices are just sustaining a little bit in the Nasdaq. The Dow Jones just rolling over to the downside. The FTSE 100, we've got 3 poor quality days of price action, 1, 2, 3, with lower highs. So there's a mild sort of bearish aspect to this trade to the downside, but nothing of any major significance. So again, we just want a little bit more information with some of these trades. The DAX, this is your all-time high, we're just rolling over. Again, there's probably a marginal bullish aspect to this trade. We're currently rejections of the lows, and prices are just rolling back over to the upside. The Nikkei is continuing its little move, but we're still in this sort of period of, you know, we failed to make a new high. We have this low just sitting in here, and prices are look like they're going to edge towards that level. So what I would like to do is to just bring this level down to here. So that is now so if I just bring that up a little bit, get rid of these two. Okay, so that's a little bit more accurate there for us. So we're on the verge of actually squeezing down to the 28,255 level for the Nikkei. And anyone trading Bitcoin, obviously a hugely speculative market. It's hard to only have major conviction for now, apart from, you know, potential further upside eventually. It's just you don't know whether this comes all the way back to 20,000 before it takes that next leg to the upside. So anything is possible in this market. It's pure speculation, it's pure casino trading, and you'd want to have sort of nerves of steel to be able to put up with some of the downside flushes that you'll find in markets like Bitcoin. So we've got risk off market conditions, so we can look for these opportunities with the dollar. The pound dollar is absolutely stacking up as probably the better opportunity. The euro below the 1873 would be a decent sell trade. So we'll have a look at the euro dollar, the pound dollar, the dollar yen. It's kind of poor quality price action up here, and what we can do is we can just identify these levels. So we can look at this chart from a technical perspective and just say, well, as things currently stand, we're in consolidation between 109.37 and 108.30. So there's a 100 pip range, and prices over the last 3 weeks are just going up and down, up and down, up and down. So difficult market to trade this. However, this would be the dollar yen trade would be interesting below the 108.32. But we are seeing a little bit of dollar strength. So the pound Swiss, we can get ready for a breakout either above the 92 level. There's your high probability buy trade. There's your rollover trade back down to the monthly high. So we're in this sort of sideways moving pattern at the moment. So we've seen the pullback for the dollar now. Again, we're support and resistance traders, so we know that this is a level of resistance, and we've seen prices bounce off the lows. So this is the area at which we would be interested if there was some dollar weakness creeping in. Then this perhaps tomorrow this market might give us a decent opportunity to start selling this trade. So we're really with the other. This is why we have a multi-asset class view of these markets, because the equities are in a risk off, which is likely to support the dollar trades. So that's why we're looking at the pound dollar and the euro dollar. The Aussie dollar is another one. So we've just broken out of this little sort of mini structure, really. Those are your major highs and lows. It's quite messy price action, but we're currently still pulling back off the highs, and we've broken this little mini structure in here. So we probably just need to see a little bit more from the Aussie dollar to get out of this. And again, I suppose what we really focus on is high probability trading opportunities, and it just, because it's in consolidation, it doesn't tick the box for being a high probability trade. So what it does is it allows us to be a little bit patient with some of these markets. Now you compare and contrast that to the New Zealand dollar, which absolutely is a high probability sell trade to the downside. So we'll definitely have a look at this in a little bit more detail now. With the cash open starts in about 20 minutes. So we'll prepare these dollar trades. We'll look for the opportunities to get in and look to take these trades. So there's your breakout trade, the 1790 level. Let's see how price reacts to that. So it comes down to the level, it just drifts sideways for an hour and then breaks further lower. So it's a little bit difficult on the stop loss side. So let's say you got in on this break at the 70.85. You're looking at a stop loss up here actually at the 71.80. So that's not good. That's a 100 pip range. So if your entry is 70.85, your stop loss, sorry, you'd be taking profit. Well, you'd have the 70.20, so you'd only be making sort of 60 pip gain with 100 pip stop loss. So you wouldn't have made even 1-to-1 from a risk perspective. So sometimes you get trades like this that it's just a linear move, and it's very difficult to establish a point for stop loss purposes. So you want to take that into account. And sometimes those trades, although you like them lower, they don't stack up. And it's not really this one individual trade. It's an approach when you see price action like this. Again, they don't fall into those high probability trades from a trade execution perspective. So we've just got a linear move, basically from 71.80 right the way down to 70.20. So 160 pip move in a very, very linear fashion. Look at this moving average. It's just, pointing downward. It's dropping like a knife. Interesting to see a little bit of sort of buying coming in at these lows. So will we break through the low to the downside, or will we see that W formation, which can give you a bit of a short-term buying opportunity there? So we'll come back to the New Zealand dollar. So there's your massive move to the downside. There's your breakout trade at the 70.90 level, and we've moved considerably lower since. The euro pound. I don't know if any of you guys were with us yesterday. We were suggesting these levels in here, not to be getting into this trade yesterday around these highs, just in case the market, ended up sort of coming back to previous strong levels, and that's exactly where we find ourselves. So now we've got two strong rejections of that level, and prices have achieved new highs. But as you can see, so far we've retraced sort of 60%. So if prices hang around this level again, then that's a third rejection. So do we want to be buying markets that are rejecting highs to the upside? Not really. Again, from a probability perspective, it's not what's going to make you a profitable trader, those types of trades. In the yen pairs, all we've managed to do in the euro yen is pretty much retrace yesterday's buying. And if you remembered, we needed to back off this trade yesterday because we gapped down quite considerably. So that's a very significant gap in this market. But as soon as it opened, it skyrocketed to the upside, again, just bouncing off the monthly high. And again, those of you that were with us yesterday, you'll know that this type of price action creates a bit of a question mark in our mind because it's gapped lower and prices are pushing in the opposite direction. So really what we generally do is we want to see if this market does actually make its intended move to the downside. And you can see we've retraced a lot of yesterday's move. And your high probability trade, if this market closes like this, it's below the 128.82. That would be the level to keep an eye out for, and that's when you can sort of look to get in on the yen strength that we've been seeing. Well, really, in the last 3 out of 4 days, really, we've seen that yen strengthen a little bit. The other thing about the pound yen is not only have we reversed over to the downside, we're now actually below the monthly high, which is the 150.09. So below that, we'd be looking for opportunities to sell. The pound is quite weak at the moment. You can see it's weakened against all markets. Gold market. We ultimately like this market lower. It's just not giving us anything to work with just yet. We didn't quite get this market pushing up to the 53.67 yesterday, and now today markets have rolled over to the downside, just largely off the back of bad news regarding the lockdown situation in Germany and across Europe, and the concerns regarding the vaccine rollout and the slower implementation of getting the economy back on track. It's just looked like it's going to take an extra couple of months longer than anticipated. The pent-up demand is still there. The anxiety from society is still there. But we obviously need vaccines in people's arms to be able to open up fully. And we're clearly not there yet. So again, when we talk about high probability trades, a break below the 58.27 is a decent trade, perhaps back to the 53. So perhaps an interesting trade there. Let's have a look at it. We'll have a look at it this afternoon. So crude oil lower, and we'll have a look at a couple of the indices. So the S&P squeezing lower. It looks like we might be seeing a little bit of an uptick in the Nasdaq, Dow Jones. So a mixed bag across these markets. We look at the S&P and the Nasdaq. Just to see how those are performing. Okay, so we'll put together our trade plan then, and we'll put it up on screen for you. We can certainly look at the euro dollar. There's an opportunity below that 1373. It's not a fantastic opportunity, but there is one. The next one is the pound. We'll bring the pound down here. So these are the markets that we'll be looking at for the duration of the trading session. And don't forget, we've got Jerome Powell. So look, we've got this little pullback in the pound dollar to the upside. So we'd expect it. It has every potential to squeeze forward, maybe another 10 pips. And then we'll see for that. We'll wait patiently for that little turnaround, that little rollover, a bit of exhaustion. Maybe it could extend a little bit higher, but we'll look to get into that pullback trade if we can for the pound dollar. The next one is the New Zealand dollar. This is primed, ready to go as far as the opportunity is concerned. So we've extended below that 70.90 level. We're right down at those lows. So we'll delve into that in a little bit more detail. Crude oil is next. So on the daily time frame, below that 58.27 is when this trade becomes really interesting to us. And then we've got the S&P 500. We're just going to monitor the S&P and the Nasdaq. We just want to see if the markets remain in this phase of risk on. Or risk off for that matter. So we keep an eye on the US indice markets. So we can go in and we can be a little bit more prescriptive with these trades. So we'll be looking for a breakout sell trade below it's the 1873 now. 1873. So that is our potential sell trade for the euro dollar. We'll put this up here, looking for a breakout sell trade below the 1873. So this was a significant structural failure to the downside. We're below the monthly high. So that would give us a decent selling opportunity in the euro dollar. So the pound, so we've already discussed the pound in a little bit of detail. So now we're looking for, sorry, did I delete that? I must have done. Okay, so look, I'll just put up the what we're looking to do here. So that price at which we want to 13800, we're probably better off just going with the major level, so we'll stick that in there. Okay, we just bounced off that now. So if we take this low, we'd like prices to just squeeze up a little bit higher. We are just approaching the open, so we can just wait 5-10 minutes, see if we get up to that 3807. Okay, so we are looking for a pullback sell trade around the 3807. If we get that, price is pushing, pulling back up to these highs in here. Maybe I can zoom in a little bit more for you. So it's just around this level, so we can probably see this market squeeze a little bit higher. Okay, so New Zealand, that's going to be an interesting one. We've already broken below the 70-90 level, so let's see what opportunities exist here. Okay, so this is our 160 pip sort of linear move to the downside. And the difference between the price action we have now and the price action we had here is that now it's creating a bit of a structure for us. So you could argue if prices break to the downside, then you can get in below this level, the 70.12, and you've actually got a level that you can work with, 70.44 for a stop loss. You didn't really have that here. If prices get in at that level, you're like, okay, great. You're not really going to put sort of a 5 or 10 pip stop loss. So then you're looking at these very irrelevant levels. The major sort of level for a stop loss in this market would actually be up at this level up here, and that's a long way. That doesn't really give you great a decent positive risk reward. But things are a little bit more different. As you can see, we've seen a very significant selling. So actually a break below the 70.21 level is not a bad selling opportunity. Okay, so this time we're looking for a sell trade below, it's the 70.21. 70.21. So I'm just putting this up here for you. I'll change it to red because it's a sell trade. So those are the dollar pairs done, and last but not least, because we're going to just continue to monitor the US markets, it's actually a sell trade below the 58.27. That would be a little bit of a green light. You could have argued perhaps if you wanted to get into the 60.35, there's an argument for that. It's just marginally above the $60 level. We've got the 50 period moving average just below it, and we've got strong levels of support down at these lows as well. So there's multiple reasons to run into a little bit of sort of resistance at these lows. But as you can see, we've continued lower, but we failed to make a new low. So that's really what's important. It's a break at 58.27. Would likely to see prices back at the 53.88. So that's how we can prepare for this move, obviously in advance of it happening. So we can zoom in a little bit. Let's have a look at it on the hourly time frame. Okay, so it's actually the 58.33 level. And again, you can see from this chart here that if we get in beneath this low, that will be our trigger point. That would be a structural failure to the downside. We've got a clearly defined stop loss. So the 62.03 is our stop loss, and the 58.33. See, this is on an hourly time frame. So you don't really want a $4 stop loss. Maybe we could work with the 61.05. And this is the other thing about trading financial markets, is that sometimes you can have the opportunity from a price or from a technical perspective like this. So this is clear cut. You know, we can make decisions. They're relatively objective, and we can leave a stop loss. But then we look at the execution of the trade and we think, right, do we want a $4 stop loss on this trade? Probably not. We'd need to make an $8 gain to sort of see a positive risk reward on the trade. We look at it on the daily time frames. You know, you could do all of this analysis, you know, relatively quickly. You could suggest, are we likely to get an $8 move from the $58, for example, down to the $50 down here? This will be a 2-to-1 positive risk reward. Are we likely to see that? It's a tough one to argue. Let's see if it might create a bit of a smaller level of support and resistance at that level, but we can certainly be looking for a sell trade at the 58.33. So let me put in this then. So we're looking for a sell trade below 58.33, and then it will absolutely be down to yourself as to whether you pull the trigger. We will certainly, obviously, when we get into the trade, we'll look to post it. Put that level just in there. We'll post it for our traders below the 58.33 level. And we'll just have to assess at the point of entry. We'll have to assess the stop loss for this trade. Just want to look at it a little bit more detail. You see, there could be an argument that we could look to work with this little handle in here, and perhaps this market might create a bit of a ceiling in this market for a little bit longer. We might get a little bit more like this, so we can hopefully look to still sell below the 58.33, but maybe we can have a much tighter stop loss. So 69.46. So, you know, $1, $1.10, $1.20, something like that. Much better from a trading perspective. So let's see if we get follow through as far as this market is concerned. So we'll monitor it. We monitor it carefully. If you guys would like me to look at any markets perhaps that you're trading in, that's absolutely fine. Just use the chat box really on the side of this broadcast. Post any questions you have. These are our 4 high probability trades. We're looking for a sell trade in the dollar, in the euro dollar, below that 1873 level. We're looking for still the pullback sell trade actually around the 3807. So we'd like it to just push probably 15-16 pips higher if it could. We like the New Zealand dollar potentially below the 70.21 level, but we are mindful we've got a linear move to the downside, which has already occurred, and we're looking for that sell trade below the 58.33 level. So this is pretty much game on, perhaps down to the 53.86. So there might be $3.5–4 profit to be made out of that move to the downside. So let's see how we get on with it. I'll tell you what, I'll just get rid of that one there, so you can see the potential for this, the space below these lows for this market to move into, and that's what you would generally try to try and see if that opportunity is there or not. Yeah, hi JJ, good afternoon. Diamond pattern on the gold market. So let's have a quick look at that. We had a few traders yesterday trading gold and doing quite well off it in terms of some selling opportunities. Right, let's have a look at this on big screen then. So we can see that the open is due now, so we'll have a look at the euro dollar now in just a second and see how the US markets are reacting to the open. So yeah, so you're talking, JJ, you're talking about this diamond pattern. So the first thing, if you step back, you can just see the price action here over the last 4 days. It's pretty much moving sideways. We've been saying to our traders now that we made these lows here at the 1676. Do you mind me asking, are you looking to buy or to sell this market? What's your sort of directional bias? Because what we would want to see is the low here at the 1676. We'd want to see at what point this market is likely to pull back to, and we would anticipate in this kind of zone in here, give or take. And we got very close to that just 4 days ago, but we've been talking about the 1760 as our selling, the price at which we would be a little bit more comfortable selling this market. Okay, so we've got a period between the 12th of March and the 23rd. So this is the 12th of March here. So from all of these trades is what we're looking at. Yeah, you can make a case for that sort of diamond. You're absolutely right, and you can see it on the daily time frame, and you can so the price action is previously coming from below. We're above the monthly low, so that's a bit of an issue for us. So we've been saying for a little while, with this market just failing to make a new high but turning bearish, that the 1750 is our high probability sell trade. It's when we'd be a little bit more comfortable. We'd break outside of your diamond formation, which you're absolutely right to identify. The overall trend of this market, and that should be taken into account, is to the downside. So our directional bias in this market is very much to the downside as well, along with you. But on the 30-minute time frame, sell down to the 1700. Honestly, we don't really have. We do like this market to the downside eventually. We know that these markets like to move towards. They move between support and resistance, and we want to take advantage of that, and look to sell when we hit resistance on the way down. We're not quite at that level yet, so don't be surprised if that acts as a little bit of it's going to suck price to it. The 1760 would be, and you see we got to see how this unfolds, because the price action's not fantastic. If we have a look at your 30-minute time frame, you see this is a definition of markets that we don't want to get into too often, which is the consolidation move. It's when prices are generally moving sideways. There's lots of traders that will look as best they can to sell the highs on multiple occasions, and they look to buy the lows wherever they can. But broadly speaking, it's sideways moving. Now, we would like the confirmed breakout either to the upside or to the downside, so we don't really care which direction this market moves if we're just trading off a 30-minute time frame. I suppose something that might help you a little bit is to look at the bigger time frames, to just understand that over the last 2 trading days, and then in fact some of our traders were getting into this trade and they were actually selling it at the low, which is actually the previous day's low, so they were looking to sell around that sort of 1727 level, and they were able to get some good trades off. The same very well may happen, but there's a lack of clarity. That's the problem we've got with gold at the moment. We don't have the signals that are screaming out at us to start selling this market just yet. Now, I agree with you. There is your diamond formation. I completely agree with that. But by far the higher probability trade is actually, if you can be patient, just look to wait to get in and sell, below that 1715 level. That's what we're looking to do. So that's our strategy, rather than sort of looking to sell these markets. And don't get me wrong, you might get some. You're trading at, you're preempting the move is basically what you're doing. So we would prefer you to be a little bit more structured than that, but there's no doubt a trade can exist, especially if you're looking at a 30-minute time frame and prices break a little bit lower. See, they're bouncing off these highs, aren't they? So see, even on a 30-minute time frame, we've got, if we track this move, this is still only just a pullback to the upside. So what we want to see is attempt to make a new high, and then you want to see the market fail, and then you can look to get in on the sell. But right now it's just a pullback off the highs. You'd probably expect this market to actually continue higher if I'm just looking at this price action. But because I'm looking at the daily, you see, I don't want to get too caught up in this trade because there's better opportunities elsewhere. So that's just our opinion, of course. Thank you for raising the trade. It's always good to look at these the different types of price action that's out there, and how to interpret it, more importantly. So I hope that makes sense, JJ. Do feel free to follow up if it doesn't for whatever reason. So we've got the New Zealand dollar close to perhaps making that new low below the 70.21. Crude oil, it's not a million miles away from breaking below that 58.33 level. It's actually a little bit lower. So that is a high probability sell trade. New Zealand dollar to the downside, crude oil to the downside, and yeah, the pound dollar. Yeah, listen, my pleasure. That's exactly what we're here for. So look, if we can help you in any way, what every trader can really do is I suppose give you their insight from their own perspective, and you know, how we trade these markets and stuff. So no, but good luck with it for sure if it is something that you are trading yourself. I would agree with the opportunity, the direction, the timing is the only thing I'd be a little bit concerned about just right now. So it looks like we're getting close to this little breakout level here in the New Zealand dollar. 70.21 level just sitting in here. So not an awful lot is happening with the S&P. We're not, I suppose the Nasdaq is just marginally sort of, it's grinding higher, isn't it? But there is your clear. There's your structural failure to the downside, and nothing really suggests anything apart from further downside just yet. So, you know, there'll be loads of traders drawing these lines and using moving averages and all sorts of different indicators and stuff, but we can very quickly kind of read what's going on. So this is a pullback from the downside. Technically there's a little structural failure in here, but it's really marginal. It's so marginal for this market. You know, you get a marginal close above the 39.12, and how we would look to interpret this is if prices continued higher and then they bounced back to this level. You know, then there's an opportunity maybe to get in on a pullback trade to the upside, or the breakout trade, or the structural failure trade to the upside. So it's transitioning. It's probably not that clear in terms of what direction this market is moving in. It probably doesn't know just yet. That would be the instinct. It's got a lot to weigh up, these US indice markets. We've got Jerome Powell later on. I'll just bring up that again just one more time for you guys. We've got Jerome Powell at 4 p.m. today, UK time this is. And we've also got the Treasury Secretary, Janet Yellen, who was formerly the Fed chair, as we all know. So there's a certain coherence, let's say, in terms of monetary policy. Jerome Powell has just pretty much carried on Janet Yellen's philosophy to a large degree, which involves, you know, mass printing, quantitative easing, lower rates, accommodative policy, basically is what we're looking at. And she's standing over as well the fiscal package, the fiscal stimulus bill coming out of the US. So she's standing over all of that. Yeah, so this is the news event. You can see it through FOREX Factory, 4 p.m. today, and this is the only concern we have for this afternoon. Really, is the where's my charts? Is how will these markets react at 4 p.m? We're likely to experience some significant volatility. So for example, if we get into the New Zealand dollar trade to the downside, we're only likely to be in that trade for a relatively short period of time, or at least until we can book in profit on the trade, or perhaps mitigate risk from that trading opportunity. Hi Finbar, good afternoon. So the New Zealand dollar pullback at the 70.55 15-minute chart before you get in. So the 70.50 targeting the 69.44. So we're at that So you're already in this trade from the 70.50 level, targeting the 69.44. So this trade has been in a bit of a tear all day, as you know. So really good trade from a trade selection perspective. Where do you place your stop loss, out of curiosity, if you don't mind me asking? So now we're breaking through to the downside, so we can look to engage with this market. Let's just take it down to the smaller time frame. So again, we just want to determine whether we get the close and the follow through. So 13. So this market closes in a few seconds. So will this market close below the 70.21? If so, we want to see the follow through, and what I'm going to do is just prepare our deal ticket so we can look to get in. So it looks like we're getting the close. And this is I suppose, a strategy that we use, that all it does is it allows us to get out of some false breakouts to the downside. So our stop loss is now going to be the 70.44 level. So we've got the close below. We just wait for prices just break below that 70.20 level, and we're in on this trade to the downside. Let me have a quick look elsewhere. The euro dollar could be close, the pound dollar, and we can certainly see more downside for that. We didn't quite get a pullback that close to where we were looking to trade it. Now there still might be plenty of opportunity for this market to actually, still tick to the upside. Maybe get into it shortly, but we've got the flush to the downside, which is right. It's got most things in play. So we're waiting to pull the trigger on the New Zealand dollar. We'll have a stop loss above the 70.44. So 70.48. So 70.48 there is our stop loss. And just make sure you calculate your trade size so it's relevant to the amount of capital you're trading, and you're trading at levels that you're comfortable with, that don't make you too anxious about trading these financial markets. We're taking a 1% risk trade on this. From a risk perspective, it broadly ranges between 1 and 3%, depending on the opportunity. So 69.44 from a take profit. Let's have a quick look at that. Just looking at that stop loss there, I'm just not sure. Yeah, so your stop loss, so you got a 50 pip stop loss on that, which is fine. And then you've got sort of a 2-to-1 profitable risk reward on that trade there, Finbar. So yeah, you're stacking it up in absolutely the correct way. I would. We're going to have our stop loss around your entry price, so I would do that. Take your risk off the table, and let's see if it continues to fly. Yeah, so the stop loss would be it'd be at that 70-50 level really, or the, what is it, 70-40, what have we got, 48, 70-48. So you've now broken even on the trade. I suppose the opportunity was really at the 70-90 level. That was your high probability sell trade. Yeah, 70-48, 0.7048 would be our stop loss if we just get into this trade. It's just bouncing off those lows as things currently stand. Just this little handle in here. We'd expect it to squeeze further to the downside. Because our entry price is around the 70-19 level, we're looking at a 25-30 pip stop loss. So, so we might be, like 25. Oh, excuse me. Apologies. We will have to end this broadcast in just a couple of minutes. We just have some trading sessions with some of our members, but we'll pack up this free session here through YouTube in just a couple of minutes. So really we'd be looking to take profit around the 69.50 level, probably Finbar. So it looks like we'll get that next leg to the downside, so we could be getting into that pretty closely. Of course, if we get in, we will we'll post it through our signal service, through our for our members. So we'll hopefully get close to that. So just to wrap up, the euro dollar is quite close to breaking below the 1873. That will be a high probability sell trade. The pound dollar, it's looking uncomfortable in terms of selling off right now. So will we just get that extra impulsive move higher before we get the trade to the downside? We'll have to keep that in mind. New Zealand dollar, just want these prices just squeezing below the 70-19 level, and then we can sell that. And crude oil, will we get another move below the 58.36? If so, there's your high probability sell trade. Nothing's really happening in the S&P, and the Nasdaq is threatening to squeeze a little bit higher. Threatening. So those are our trades, guys. I do apologize. I'm going to have to wrap up this broadcast. For those of you that are interested in learning how to trade, we can certainly help you guys along the lines of kind of what you've experienced. So we've got a wide range of products and services all available through our website. So do feel free to go to thelivetraderoom.com if we could be of an assistance to you, all at very, very low prices. So and feel free to get in touch with us through the website as well if you have any questions about kind of what we offer and how they can sort of help you get a foothold in these markets and be a little bit more mindful and understand a little bit more about what you're doing, and most importantly why you're doing it, and position yourselves with tactically with objectivity. All these sorts of things come to the fore, and it's about, really, for traders, it's about putting it all together. We hear time after time different traders are really good at different things. Perhaps they've got an understanding of the fundamentals, but they don't really understand why price is moving the way that it's moving, and vice versa. People really good on the technicals, but the fundamentals are kind of all over the place. Or how does sentiment impact these trading decisions? And trading, really, for profitable traders, is developing a trading idea, doing your analysis across fundamentals and technicals, and look to position yourself in those markets which you think are likely to be where you stack the odds in your favor technically, to try and gain an edge on a consistent basis. So it's about putting kind of everything together as best you can, and we can obviously help you do that at the live trade room. Just before I let you go, I can see the stock, the S&P 500, is just squeezing higher again. So are we going to have an unwinding of these dollar trades? We'll have to wait and see. The New Zealand dollar is just bouncing off its lows. The euro dollar is really struggling to just squeeze probably 10 pips lower. It's been like this for quite a while. And then the pound dollar, we'll have to be objective in our decision making either way and give it every opportunity to see where the capital is moving to. We'll keep a close eye on the US indices markets as well. So broadly speaking, we've had significant retracements across most of these markets from yesterday's trading. So in terms of execution, we're only in the pound dollar trade to the downside. We're not in any other trades just yet, but that very well may change. But it's largely due to the retracement we've seen in today's trading and largely in yesterday's trading as well. They don't generally give us strong, high probability trades. So it's the breakout of those important levels is what we'll be watching very carefully for. So look, on that note, thank you very much for joining us. It looks like the New Zealand dollar is getting close to that sell trade. If we get into it, we'll post it obviously through our signal service for our traders. And we'll see what other opportunities may lie ahead as well. So if you can give us thumbs up or subscribe to our channel, you'll be notified when we do. We've got a lot of content in the pipeline, which we'll be looking to broadcast as well through our YouTube channel in the coming weeks and months. So if you can subscribe to the channel, that will be great. That will be very useful for us. And give us a thumbs up if you can. And we'll be back again tomorrow at 12 noon. So from everyone here at the Live Trade Room, thanks for joining us. Take care, and we'll see you soon. Bye for now.